Yeah. So again, we've got this foreign direct investment coming in. So where is that capital going to be put to use? And what is going to be the big unlock? My mental model for this particular cycle is the everything, everywhere, all at once cycle. Because if we think about it, $67 billion went into VC into the space in 2020 and 2021. That money has been given out to founders who are building all sorts of applications and projects and everything else. Some of them will be infrastructure layer, some will be applications layer, and everything in between. And if you see the focus of where most of these teams are working on, it's kind of everywhere. So we're seeing the asset management, the fiat world companies are building on rails from crypto land. So, this is Franklin Templeton. This is all of these people looking at tokenizing real world assets. I think that starts, the first wave of that starts. Then we're seeing at the other far end of the spectrum is everybody's focused on gaming because there's a huge audience there. So somebody's going to crack gaming in some respects. And pretty much every protocol has got teams working on that. We've got in the middle, okay, things like compressed NFTs and Solana, I think are a much bigger deal than people understand because I think it allows for ticketing. And ticketing is at scale consumer application of blockchain, of which you don't need to know it's blockchain, which is what the space has been waiting for. Jumpstart the business cycle again. Then we should see a very strong 2024 and most likely a strong 2025. The business cycles have been almost like clockwork, 2-year up cycles, 1 year peaking, 1 year down. And that corresponds. What's amazing is the Bitcoin halving cycle is the same as the debt refi cycle, which is, I think, what drives everything. It's the same as the election cycle. They're all the same thing. So, if that continues to repeat, then it should go until 2026 when that should be a bear market year. But, let's see. So I am obviously very bullish. I don't know. And I was talking to Nova about this yesterday. I've got 3 outcomes in my head that I'm juggling with. The 60% probability is we have kind of a very traditional cycle, and that pushes, Bitcoin up to the 100,000 to 200,000 range and, all the other assets accordingly where they are on the risk curve. There's a 20% chance this early start is signifying something much bigger, which is the larger adoption and the more capital into the space, which leads to larger price rises than people expect because people are it's a broader based thing and we get a yield so we can just sit on it, which they don't get with Bitcoin, but they understand the Bitcoin story as well. So they understand there's 2 different things here at play.
Oh, this is so fascinating. Okay. But yeah, right. Because you were talking to people where you've explained the difference. But do most institutional investors understand the difference between the two even before you explain it? Or is it something that's kind of new information for them?
I think it's new information, but they will figure this out pretty fast because the people who are going to add an ETH ETF into their portfolio are reasonably advanced, or they're RIAs because they got retail clients who want it. The people who are much more cautious, but they want crypto exposure, will definitely go for Bitcoin. So I think there's a level of sophistication that means that they would most likely ask the question is, how do I get the yield?
Okay. In which case, then that ETF might benefit the likes of, or I guess it's not the ETF, but simply that ETF may not have the same reception or rollout in the traditional financial markets, whereas we might see kind of a continued benefit to play.
Secondly, it's FireDancer, which most people aren't aware of yet, but FireDancer is the validator built by Jump Trading that essentially rebuilds Solana in a different language from the ground up. What they've done is double the security by having these 2 validators on the network. And in testing, it's had 1 million TPS. So this is of an order of magnitude different. Why does 1 million TPS matter? Because Solana's pretty fast as it is. It's because it matters, and why it's being built by Jump Trading is high frequency traders use fiber optic cables and their constraint is the speed of light. And they're like, well, if we want exchanges to go decentralized and be able to cope with the traditional financial markets, you're going to need to get to this speed. That's what this is about. And that opens up a whole bunch of use cases. So I see the vibrancy of the Solana developer network. I also think the UX of Solana overall is just nicer. It's just an easier place to hang out. And so, the applications built on Solana just seem just a little bit easier. And so the comparison, Chris Berniski talks about this as well, it's like Android versus Apple. It's like Solana feels like Apple. It's a closed system, but it's very slick, very good, will create great loyalty. Ethereum is much broader, much more open in terms of other things that can be built on top of it.
So do you expect one of them to become more dominant?
It's too early to tell. I mean, I would remain that ETH remains dominant because, there is always innovation going on in ETH. It's not like it's a dead chain. So I just assume that the amount of smart people in the entire ETH ecosystem will bring breakthrough after breakthrough. But I just think there's a big catch up in valuation terms of the Solana network versus ETH network. Should it be a multi-$100 billion ecosystem? Could it be? Probably. Could ETH be a $1 trillion plus ecosystem? For sure. I'm not sure that the pecking order changes. It may not appear value yet because it all feels like it's memetics being traded. But and I think Udi makes this point pretty clear, it's about that the network can be used for other things. So if you remember, I was talking about Ethereum and Bitcoin didn't have any other applications layer because it's purely the store of value idea. But when you can do other stuff with that network, that's a very powerful idea. And what does that mean for Bitcoin? I don't know yet, but I can only see it as a positive development. And I know some in the Maxi community say, well, this is a terrible waste of block space.
They call it spam.
Yeah. But, I'm much more open-minded and say, listen, if you've got the most secure, the most important difference here, and it's the point that Elon Musk made, is like most NFTs are actually not assets you own. They point to a place in a database for where the asset is stored. Inscriptions are on the chain. And so this is going to have its own value for different things, where provenance is absolutely crucial and something could never take away, a database can't go over, a server can't go over, something that loses the primary source of the information that the smart contract is holding. So yes, I think again, I love this space because we start using technology in stupid ways by creating memes, but really the technology is being bootstrapped into being able to be used for really more meaningful things. And I think the inscriptions idea overall is very powerful.
You've said that crypto is macro and macro is crypto. So for, let's say, the next 6 months or so, how do you see the macro picture affecting the crypto markets?
Yeah, so my crypto markets are forward-looking. So most people are saying, well, we're probably around a recession. We're seeing unemployment go up, blah, blah, blah.